What's going on, guys? So not sure what a balance sheet is or how it works, and you're trying to open up your own adult daycare maybe? Well, in this video, we're gonna show you how, but you first gotta like, comment, and subscribe, show some love, and we will help you understand how to read and interpret a balance sheet. For those who may not know, my name is Chris Chan, the founder and CEO of Active Age Daytime Senior Care. And today we're talking about the balance sheet, how to read it, how to understand it, because if you're opening your own adult day center, you're probably gonna be applying for an SBA loan. And whether you have an existing business or you have past experience, if you had to potentially share with that bank your balance sheet of your existing company, or if this is the first time that you're opening a business, you might be filling out what's known as a personal financial statement. The reality of it is whether it's a business or whether it's you personally, both a personal financial statement and a balance sheet are very similar. So this can apply to either person, no matter what situation you might be in. But either way, if you're going in business for yourself, it's very important that you understand the balance sheet, because this is gonna help you understand the health of your business, where things are at, and if you have a positive or a negative equity. So that being said, guys, it's important to understand that the asset column is typically made up of three different areas, okay? So you're gonna have current assets, you're gonna have tangible assets, and intangible assets, okay? And of course, just so you guys know, it's equities equals assets minus liabilities, right? That's how this whole formula works, okay? So that being said, guys, on the asset side, when it comes to current assets, that's things like cash or your accounts receivable, money that you've billed out for services rendered that you're waiting to collect a check on. And it might be inventory, things that you actually have in-house, and this might apply more so if your business has to do with selling products and goods, because that inventory is essentially like cash sitting on the shelf that needs to be sold. And a business like Adult Day, inventory may not be that big of a number. It might be your accounts receivable might be a bigger number than even your cash position. But either way, these are very liquid. They're current assets. They're very, they're highly liquid. Okay, and then you got tangible and then intangible assets. And tangible assets might make up things like your property or equipment. This might be things like maybe you have food service equipment, you have a refrigerator, a freezer. You might have certain things, certain activities, or certain devices maybe that would kind of be considered property or equipment that actually are tangible. You could potentially sell them. They have some sort of worth, and it's something that you could sell. It's not part of the structure. Other things that might be tangible assets are like automobiles. So if you have vans and you're transporting people to and from their homes, all of the vans that you might own, those are tangible assets. Things like computers, printers, or any sort of other office supplies, those are gonna be tangible assets that make up the asset side of your balance sheet. When it comes to your intangible assets, these are the things that you can't necessarily measure. It's hard to put a value on them, such as goodwill, patents, or trademarks. And if you're just starting out in business, there may not be a lot of goodwill there. No one knows you yet. And if you're just starting out for the first time and you got a patent or a trademark, unless it's already a well-known patent or a well-known trademark, I guess the patent thing could be different, right? Because that might be like an invention. But in the case of Adult Day, it might be the trademark that's valuable, or there might be some sort of patent on some sort of proprietary software system that you made. Either way, those might have value, but a lot of the value may only be able to be measured by what someone's willing to pay for it, but you don't know if anyone out there is willing to buy what you have to offer. So it's hard to put a worth on this thing, especially at the early stages of a business. But a lot of times, this can be an area that as the business grows and as the business continues to gain a much larger following and a much greater reputation, let's take businesses like Apple or Google or Disney or Microsoft, these massive organizations, they have a lot of goodwill. Their trademarks have a lot of value. But any business just starting out, that's probably going to be an insignificant number, not something you really got to be worried about, But it is something to at least be aware of. When it comes to your liabilities, you're going to have two types of liabilities. You're going to have current liabilities, and then you're gonna have long-term liabilities. And current liabilities are gonna be things that are maybe owed within the next 12 months. So less than a year, they're due within the next 12 months. The long-term liabilities are gonna be things that are due over the period of time that's greater than 12 months. So when it comes to current liabilities is gonna be things like accounts payable. Maybe you owe vendors, okay? Maybe you purchase briefs for your adult day. Maybe you purchase, certain activities from a local vendor that you get on a regular basis, whatever that might be. You might have people that you owe money to, or this would be known as accounts payable. Those are gonna be current liabilities because they're probably owed in the next 30, 60, 90 days, depending on the terms that you might have set up with some of those vendors. This could also include credit card debt, because credit card debt is typically more of a short-term liability, more of a current liability than it is a long-term. When it comes to long-term liabilities, this might be things like your SBA loan or any other kind of business loan that you may have taken out. This may also include things like your automobile loans if you purchased vans to help you with your transportation. So this would be then your long-term liability, because most of those would all have due dates that, maybe they're amortized over 20 years or 10 years or 15 years, or the car loans might be amortized over 2 or 3 or 5 years. So all of these are gonna be more long-term liabilities. And then when it comes to your shareholders equity, hopefully you've ended up at a positive number. As far as there's not a negative equity here. At the end of the day, this all has to balance out, right? No, in this case, assets equal liabilities plus equity. There's a reason why I put assets here and then liabilities and equity here, is because these two things need to balance out. They need to equal the same amount at the end, okay? So they're in balance, okay? And so the reality of it is that when it comes to the shareholders equity, you got really two things. You got retained earnings, which are gonna come from the business itself making money. And so if there's leftover funds that can be reinvested into the company for future use, that's gonna be your retained earnings. And then you're gonna have your common stock, which is the worth, what you're worth, essentially what the shareholders are worth on paper. When you think about the common stock, what is that amount, okay? What is it worth? What is the equity in this company worth? And that's what that amount's gonna be. So that being said, guys, I hope this helps you understand how to read and comprehend a balance sheet. Again, whether you're in business and you're just opening your first business and you're kind of going through the banking process, you're gonna be filling out a personal financial statement, which is basically the same thing here, but it's directed towards your personal financial savings or personal financial situation. And then, if you have an existing business and now you're expanding and you're opening up maybe a second, a third, or a fourth location or something like that, the bank is more than likely going to take information from your existing businesses, utilizing things such as your profit and loss statement and your balance sheet to kind of assess whether or not you are worthy, whether or not you're a credit risk, or if it's, if you're credit worthy, are they willing to give you a loan? So that being said, guys, it is important to at least understand how to read, understand, and comprehend a balance sheet. Hopefully this was helpful for you guys. If you haven't already, make sure you check out our other videos on profit and loss statements and then cash flow statements, so you can understand how to read all of these numbers and make sense of all these different statements, because you really need the three of them to understand the health of your business. This is like getting a pulse and checking your oxygen and making sure that your blood pressure is right. This is all of those things combined into one to make sure that your business is running healthy and that it's in a healthy position. Because the last thing you want to know your numbers. You don't want to be left in a position where you're all of a sudden you're coming into a cash crunch because you didn't manage your numbers well. So it's important to know where you stand at all times, and you really got to look at all three of these statements to understand that. So that being said, guys, if you're interested in opening up your own adult daycare center, make sure you go to adcpro.com. We have monthly webinars every single month. We have a private Facebook group. And if you want to learn how to open up your own adult day franchise, I know a really, really good company called Active Age. So go to activeagehair.com/franchise to learn more. We'll see you on the next one. Peace. Hey guys, thank you so much for joining me. If you'd like to learn how to open your own adult daycare center, go to adcpro.com. If you'd like the latest business tips, click here, and make sure you subscribe to our channel. Click here